Hello everyone. Thank you so much for coming to the Finland Pavilion. We're going to be starting an event here in just a moment. And we're going to be talking about a very important aspect of climate action, which is coordinating between actors. We know that there are governments who come here to COP to negotiate, to figure out what needs to be done. We also know that here in Brazil, there's an emphasis on implementation and the action agenda. That involves actors all throughout the system, including in the private sector. So we're going to talk through in just 45 minutes the state of the corporate transition, where are companies today, the state of the sovereign transition, where are national governments, how can they be coordinated, and we're going to discuss that then with a panel that we have today. So to begin, we have very sadly lost Anna Salminen, who was going to speak to us from the perspective of the Finland Ministry of Agriculture and Forestry, and she was needed in the negotiations, and we're very understanding that that needs to be her priority today. But we're very pleased to welcome instead Ville Holkonen, who is the Director for Industry at the Finnish Forest Industry Federation, and he'll be able to speak to some of the same reflections that we were hoping to hear from Anna. We also have Rahul Ghosh, who is Global Head of Sustainable Finance at Moody's, and he'll be able to share reflections on the financial markets. How does that feature in this coordination challenge? And finally, we'll have Flavia Bedix, who is Policy Lead for ESG at CDP, bringing some reflections from the corporate sector from that disclosure point of view. So I'm going to go through my presentation answering these three questions. So the first question is, what's the state of transition among companies in high-emitting sectors? At the TPI Centre, we're a research centre at the London School of Economics, and we assess companies, banks, and countries on their transition towards better climate action. For companies, we have these two pillars that we assess companies on. So firstly, we have an assessment of over 2,000 companies on their management quality. This means we are assessing the policies that they have in place, the disclosures they have, the incentives. And you can see from the distribution here that most companies are on level 3. That means there's some level of climate disclosure, target setting, and climate action that's being embedded into corporate decision making. Level 5 is a more sophisticated level where we have more demanding indicators that ask, have they disclosed CapEx plans that align with their targets for climate action? So I'm going to go into some examples there of those indicators and where further action needs to happen. The second pillar that we have is carbon performance. We assess 500 companies in the highest emitting sectors, and this is where we look whether their forward-looking targets are ambitious enough to align with the goals of the Paris Agreement, 1.5 degrees below 2 degrees. And this is really important to help investors understand and align their own portfolios with their own net zero targets. This is just a snapshot of the questions we have on level 5. So these are the most demanding questions that we have for companies. We're asking, have they disclosed and quantified the different actions that they're going to take to meet their emission reduction targets? Have they specified the role that offsets are going to play? Have they made a commitment to phase out CapEx in carbon intensive sectors? And have they actually committed to align those CapEx with their wider decarbonization goals? And lastly, do they have, and we're going to come back to this example later, do they have a clear approach to connect their own positions on climate change and lobbying with those of the trade associations that they're part of? And you can see in the bar chart across 2,000 companies, very, very few meet these high challenging, high demanding disclosure requirements. This is now the slightly more optimistic slide. So this is showing the carbon performance assessment, so the target alignments from 2020, 2022, and 2024. So there were assessments in between, we do them annually, but it's just to give you a sense of this trend. And where I would want to draw your attention is in 2020, just under 10% of companies that we assessed were aligned with 1.5 degrees in 2050. This is the year we introduced that benchmark because the modeling was then available to evaluate companies at that level of ambition. And if we fast forward to our latest assessment data set, so we were collecting those data in 2024, now you see 30%. We take this with a grain of salt. This is 2050 alignment with 1.5. It means net zero by 2050 in most sectors. That alignment, it has tripled from 9 to 30%. It's a very significant ramp up in ambition, but it is forward-looking, it's long in the future, and that needs to be complemented with lots of very specific actions, intermediate targets, as well as decarbonization implementation. So it just sets the scene a little bit. There's some improvement that we can see right now. So this is the last slide to just give you the snapshot of where we're at with companies. On management quality, that was the first slide I shared. There's continued progress. Most companies are somewhere along the way, but very few have robust transition plans, and we'll actually hear a little bit more about what is a good transition plan from Flavia later. On carbon performance, I mentioned this long-term improvement in alignment, but overall, when you include those intermediate targets and the whole pathway, companies are set to exceed the 1.5 degree carbon budget by 61%. So we're well beyond, we're across the companies we assess, we're going to be emitting much too much emissions, and it's going to overshoot 1.5. That's confirming many other studies that look at this. And that means we need to work faster, run faster to drive those emissions down. What does this say about the credibility of climate targets and the credibility of net zero when it comes to company statements and commitments? So we've heard there's gaps in transition planning. We need to see improvements there. Decarbonization rates need to accelerate. This is as we're eating up the carbon budget, the slope gets steeper for decarbonization, and that's important that investors understand that companies and governments all understand that we need to be running faster. And lastly, a sort of deep dive question that we were looking to answer in our State of the Corporate Transition report was, what are the technologies that companies are intending to rely on in their transition plans? And many of these technologies are actually unproven or not yet developed, not yet scalable. And that's a really important thing for investors to understand the credibility of wider transition plans, but also to understand the investment needs in R&D and further development. We're coming now to the second question. So what is the state of transition among national governments? This is what we've been able to dive into in our State of the Sovereign Transition report. This came out just yesterday, so you can open up the report using the QR code if that's of interest. And this is really looking at a set of 85 countries, 85 national governments we've assessed, and we found a mixed picture. So there are countries who have retreated in the last year. We know the United States have been doing that. And it has put a big damper on motivation and the media story around climate action. And what I want to bring today, what we're able to showcase in this report, is that if you set aside the US, the trend is one of steady progress. And that's really important for us to remember that here and carry forward that message to the negotiators, to everyone who's working on this challenge. So this is the framework that we use to assess countries. You remember the two pillars we had for companies? These are now the three pillars that we use to assess countries across these 85 countries. So firstly, we look at the alignment of emissions trends, historical emissions trends. We look at the alignment of forward-looking targets. It includes 2030 and 2035 NDCs, and also net zero targets. In the second pillar, we assess a range of different policies that countries might put in place to drive down emissions. So these are mitigation policies, but also adaptation planning policies to manage physical risks and just transition. In the third pillar, we have a range of topics under climate finance. So it includes international contributions of climate finance from developed to developing countries, but we also look at the disclosure of costs. So emerging market countries disclosing the costs of meeting their climate goals, including both mitigation and adaptation goals. And that's also a bright spot of optimism, which I'm going to highlight in a moment. So this is the universe of countries we now have in the ASCOR tool. This is the sovereign assessment tool we have. And these 85 countries account for 100% of 4 key sovereign bond market indices. This is what makes this tool really important and useful to investors to incorporate into their decision making, their portfolio analysis. They need that significant coverage. This is the snapshot of our results today. So you can see a mix of green, red, and orange. Orange is where the country has a mix of yes and no responses in a given area. I'll just draw your attention to a couple places. So net zero targets here. This is almost 80% of countries have a net zero target across the 85 countries. Maybe this is familiar news. I think it's really, really significant. That sets the long-term goal, and many of those net zero targets are actually established in law. Not all of them, but many of them are legal requirements that the countries then are legally obliged to meet. But you can see there's a lot less green when we look at historical emissions trends and 2030, 2035 targets. So the intermediate alignment is lacking. In the middle pillar, we see bright spots on climate framework laws. Here we assess climate framework laws. It's a special type of legislation that countries have been putting in place over the last years, since the mid-90s. And it's a form of legislation that puts long-term climate goals, a strategy, into law in the country, and it helps to coordinate different actors, different ministries, as well as the private sector. So it's a very interesting policy tool, and there can be different nuances in those types of laws. So we're seeing great adoption there. There are other areas, such as fossil fuels, where we assess the phase out of fossil fuel subsidies and production. We're assessing commitments to phase those out. Those are much less progress in that area, because those are challenging indicators. It's a very politically difficult area to make progress on, but there is still progress. And lastly, in the final pillar, what we see is under transparency and climate costing, I mentioned earlier, this is 51% of countries disclose a breakdown of the costs of meeting their NDCs and their NAP, so both their mitigation goals and their adaptation goals. You'll see on the left, those are the number, or on the far right, sorry, those are the, those are the number of countries we assess on that area. So for the transparency and climate costing, those are just middle and low income countries because they've received the mandate from the UNFCCC to disclose those needs in order to receive international climate finance. And we see there a lot of progress forward in terms of the quality of disclosure. That's an important key message here. So this table is where we can look a little bit at the progress between last year and this year. So at a global level, this is our entire universe that we assessed last year and this year. And these are the net movement forward or backward on climate change for all those countries on all the indicators in that row. And this is the key number, is to show that things are net moving forward. There's net improvement. And if you separate the US, as we have, you can see the significant retreat, the significant retrenchment in the US. A lot of targets have been withdrawn. Moving out of the Paris Agreement means the NDC is no longer considered active. The net zero target is no longer considered active. There are many other things that have been withdrawn on the just transition, on adaptation. And so pulling out the US though, the rest of the picture is actually quite positive. And that net movement forward is really this key message of evidence for optimism. So the final question that I have before we welcome the panel, and I'll keep this very brief, is what are the policy tools that can bring these two actors together? And we've written this paper here, published last week, that looks at one possible tool, which is called sector transition plans. They might also be called roadmaps. And we'll hear about this from Ville, actually, in the example of Finland. What is this type of policy tool? How can it be used to coordinate between countries and governments? So just a few reflections to also set the scene for the panel. There is synergy between companies and governments. So this is research has found that if a country sets a net zero target, the companies in that jurisdiction are more likely to set net zero targets, and vice versa. That's very interesting. If you look at the timing of when these are happening, they reinforce each other. Again, this is with a grain of salt because these are net zero targets in the distant future, fairly easy to set, but it means something. It does mean something. The other synergy, fairly intuitively, companies that are headquartered in a country that has advanced climate policy making are more likely to have good transition plans, ambitious targets. But there's also misalignment between country governments and companies. This might be in the form of lobbying. So I mentioned earlier this misalignment between a company, how they're lobbying on climate action, and how their trade associations might be lobbying. There's also a key barrier in the implementation of companies' own transition plans, and that barrier can be policy. This is what we call external dependencies. So it's the barriers on infrastructure, on enabling environments and regulatory environments that might create barriers. So sector transition plans can act as a bridge there. This is, I think, my last slide about sector transition plans. It's just to say what are in these plans. They set a vision that's usually a sector-specific target. How are emissions going to fall in that sector? There may also be goals for resilience. So alongside that vision, how is the plan going to be delivered? That might look like technology roadmaps. We'll hear from that from Villa about those. And then also specific policy plans, regulations, incentives, which might be carbon pricing, it might be subsidies, to enable that vision to be met. And lastly, very important, there's the piece of finance, which we'll be hearing from Rahul. How does the government coordinate to get investors involved, private sector investors, but also using public funds? What are the investment needs to get a particular sector decarbonized? What are the available capital types? How can they be harnessed? So with that, I think I'll skip this, and because it would be great to hear from the panel now. This is just a preview for the paper. So I'm very glad to welcome to the front my three panelists, if you would like to come take a seat. So I was hoping we could start with you, Flavia. So something that that I just presented at the very end about these sector transition plans. The idea there is governments are helping companies understand what it means to transition. What does it look like in your particular sector? What are the regulations? There's also another side to that feedback loop where companies can actually feed in their data into policy making. So I'd love to hear about your work in that area.
Thank you so much once again for the opportunity of being here. Very nice to be next to you, and welcome again. Maybe just to share very quickly a little bit of the work of CDP and how we connect disclosure to NTCs and investable NTCs in particular. CDP is a not-for-profit organization, and we surface information in order to enable Earth-positive decisions. And what we've been doing for more than 25 years is to collect information from corporates around the globe. We have about 25,000 corporates representing over 2/3 of market capitalization right now, disclosing information to CDP, aligned with IFRS S2, also connected to TNFD disclosure, and with many other standards and frameworks. When it comes particularly to transition planning and to this loop that you're mentioning, Antonina, with NDCs, we have about 1/4, so 1 in 4 companies disclosing to CDP looking into transition plans. And this year, we focus our work on national transition planning, really trying to see what were key data points that governments would be interested in from corporates that are looking into transition plans that could connect to NTC monitoring and tracking. And so in this process, we have identified the need for greater coordination among government entities, subnational entities as well, and corporates to ensure that the information flows from corporates all the way to the national level. We have done mappings of those transition plan data points against the Brazilian NDC, against the BTRs as well, and the NBSEBs, to see really how the flow of information can be built on this feedback loop that you said.
Amazing. Thank you so much. I think it's really key, and it's really not exactly what CDP was set up to do, right? This is taking advantage of the data we have to bring it into a new use case. I think that's very exciting. And actually, speaking from maybe the government perspective, or as well as the industry perspective, we have Villa here. Can you, and I actually want to set the scene with a little bit about Finland, where we're very fortunate to be hosted today. So Finland, I think, can generally be considered among the climate leaders. There's a very ambitious net neutrality target for 2035. There's a very high carbon price. It's over 100 euros per ton of CO2. Very high renewables share in the grid. So given that, what are the lessons that the rest of the world can maybe learn from Finland, particularly on this coordination journey between government and the private sector?
All right. Thank you for having me, and welcome you all. I'm the only Finn in the panel, so I want to welcome you on the Finnish pavilion. It has been now 6 years since Finland set, at least at the time, the most ambitious climate goal in the planet. And maybe I just quickly take you to what happened then, because that explains also the challenges that we have so far encountered. So it was the time of high climate politics around 2018, 2019, also here on the international stage. And Finland then decided to take a political target of being climate neutral by 2035, so 16 years from the target set, of the moment of the target setting. And there was, I would say, a vague understanding of what that kind of politics in practice would mean. We knew, of course, we had a figure for our current emissions, 53 million tons CO2 equivalent, and then we had what has now, what we now know was a false understanding of our forest lands sink potential. So Finland decided to take a carbon neutral approach to the climate target. So then, being precise people, we started to count, measure how to actually reach that climate neutrality in 16 years, believing that the challenge was coming down with emissions of 53 to meet the carbon sinks being around 20, so 33 million tons should be reduced. So then what happened after this political target setting was 14 different sectors were supposed to make their first climate roadmaps or transition plans. And it was very attractive time, because more than many things, I would say, even historically, this climate target united both industry, private sector, municipalities. Everybody wanted to be in. So 14 different sectors made their climate road maps, and they turned to be both plans, but they were also, I would say, it was a lot about researching the opportunities, but also the impacts. So because nobody really had the idea of how to get there. So then after the round of these sectoral roadmaps, then the government took over and continued from where industry it was a kind of a self-made plan for the industry. So the government took over and then started to build the puzzle for the national target, which then turned out to be a long-term national climate plan, and then next step, a few years later, a climate law, which is now in the legislation. We have plenty of time, so I will stop here, but there has been also challenges, but let's get there later.
Absolutely, sure. No, looking forward to hearing about that as well. And really, it's interesting to hear about the process as well, because different countries have developed these roadmaps in different ways. Sometimes it's actually industry-led, sometimes it's government-led. So in the case of Finland, was it government-led, or just to clarify that?
Yes, it was government-led, but the sectors, the industry had very much responsibility and opportunities to kind of go into their own plans. Input.
Yes. Amazing. That's great, because then there's another actor here that's very important, which is investors and finance more broadly. So I'd love to turn to you, Rahul, and if maybe because the audience is very diverse, we don't know what everyone is coming here with. If you could give us a quick definition or explanation, what is a credit rating? Because Moody's is one of the major credit rating agencies. That's a key part of the financial ecosystem. So maybe just giving that quick description, and then laying out basically what are the different actors in transition finance. How do we get this coordination to happen? Because it needs to be funded. How do we get that transition finance?
Wonderful, thank you so much. Can everyone hear me at the back? Good. Well, firstly, thank you to the TPI, thank you to the Finnish Pavilion for inviting me here today. What is a credit rating? So, a good place to start, Nina. A credit rating is essentially like any individual, a household will have a level of creditworthiness to be able to borrow money. And whether you're a government borrowing money to pay for new investments, whether that's schools, hospitals, solar panels, whether you're a company looking to invest in factories, often that is large amounts of money. Often that's larger than banks can lend to you. And so you will go to what are called the public debt capital markets to raise financing. And that's where a credit rating can help guide investors into, are they going to get their money back in full and on time? So that's what a rating agency does, and it's important because when we think about the story of transition, it really is a story of financing. Many of us have been here for quite a few days now. We hear the various trillions of numbers. I don't know about all of you, but I sort of I lose myself a little bit in the trillions of numbers. It's quite hard to dimension them. So I want to be a bit more optimistic. The way I think about the funding gap is in terms of GDP. So where we are today and the gap to where we need to then be on a pathway towards net zero is about 1.8% of global GDP, which actually I don't think sounds like a lot, really, compared to the trillions. Of course, it's not equally distributed. It's not equally distributed by region, and it's not equally distributed by actor. So what does that mean? How do we bridge that 1.8% of global GDP gap? Number one is governments, as Nina mentioned. So firstly, governments do need to step up spending. And that's challenging, particularly in the post-pandemic environment where debt levels have gone up, and many governments are wrestling with other priorities like education or healthcare or access to services. So that's where having good targets, plans, as Nina showed earlier at the governmental level, is important to help give investors confidence around what you're doing as a government. You then have, without doubt, the need to scale up private sector financing as well. Governments can't achieve these targets alone. And what does the private sector need above everything else to make investments with confidence and with comfort? They need consistency and they need clarity. What we don't need is policies going one way, for 1 year and then moving back the other year. So I think a lot of interesting data that Nina and the team at ASCOR have is around sector roadmaps, sector assumptions, because that gives us if I'm a company and I'm investing in a new electric vehicle facility, that's a 30-year investment and it's a large investment for me to take on. I need to have confidence that that policy isn't going to change. When are we going to phase out combustion engines to make that investment? And then my final point on this story will be, well, what if you have weak government finances, but also not an active private sector? Well, that's where the role of the MDBs, the multilateral development banks, will come in. And we've seen a lot of good examples of that this week and different initiatives. What I would say about MDBs and blended finance, and I'm not sure if we'll go into that space, is keep it simple. Complexity kills scalability, and again, we can talk about that. So it's public sector, government spending, it's private sector, and it's the MDB community.
Thank you. Thanks so much. So I think the reflection here is there are a lot of barriers, there are a lot of actors in this space. I think it would be interesting to come back to the case of Finland actually and hear a little bit what are the specific barriers that you came up against here, and maybe if there was anything related to finance, getting investors involved, were they kind of jumping in on this and interested in those measurement challenges potentially, or not, but please.
Yeah, I actually want to continue on the investments and the clarity and transparency and predictability of the legislation, because and now I think this is something that we need to maybe holistically thinking about the whole climate project that we are dealing on the planet, but also when it comes to country level forerunning position, because being on that position, you need to tolerate costs, and you need to tolerate kind of new understanding, which then needs to also become, you need to be reactive on the way. And now this is where it gets complex, because once you start with the political target setting, it is very difficult to touch something that then becomes very holy. I said, because this climate in Finland, we are not living we are not having kind of, there is very little political pressure on the target setting. But then going on the roadmap on national level, it's difficult to react on new findings. And now, when it comes to the predictability of the legislation, it is as Rahul says, the investments that you need to make on this roadmap, they are huge. And they are usually, if you talk about energy sector, for example, the actual product, the electricity or fuel, you don't have a qualitative kind of difference of the production that used to cost 1 unit and next day cost 4 units. Now, being able to make predictable legislation, you actually need to have a lot of technological and logistical and comprehensive understanding of what will the impacts be. Because if you're not, then you just put high targets, but if those high targets kind of exceed the limits of reality, of physical realities, so to say, so then you end up in a situation where as it's saying on that wall, where the pressure does not anymore turn into progress, but the pressure just hits a kind of wall, and then you lose the momentum and the credibility, and then you lose the legislation behind the investments, and suddenly you are in a position where, as you say, there is back and forth going legislation. And this is where I see in the EU, for example, we are at the moment, that the pressure and the ambition is still there, but we don't, and the legislation is even there, but we don't have technologies or the cost efficiencies yet to go there. And then you need to tolerate.
Absolutely.
Can I want to ask you a question, just follow up on that. You said that that's no longer an issue or a debate in the Finland context. What can the EU and the UK, where I'm from, learn from the Finland experience on getting the politics right to set the foundations for the investment?
Well, this is good and difficult question. It is an issue in Finland. We are talking about it all the time, but it's not. There is no kind of risk. I would say there is no significant political opposition that is wanting to rip in pieces the project. So maybe my answer to your question would be that you need, as I said, we happen to have a momentum in Finland where you had very widely accepted targets. I don't know any other countries actually, maybe somewhere in the Nordics, where you have the industry so much supporting it, because in industry in Finland saw this as an opportunity for new investments and opportunity. Yeah. So the unity and wide base for that project.
Very impressive.
Yeah, absolutely. No, it's quite a challenge. And actually hearing about the case of Finland as a front runner, as you call it, we also have Brazil, here where we are in Brazil, a lot of front running in another, from a very different place, from a very different starting point. I have a lot of admiration for the presidency here in Brazil. They've just put in place carbon pricing domestically. They've just set up a domestic taxonomy for sustainable finance. And they've used both of those new policies to supercharge that into international collaborations using their host position at the COP. They're talking about coordinated carbon pricing internationally. They're talking about a super taxonomy. So there's a lot also to learn here from Brazil. And Flavia, you have a very interesting project innovating really with corporate data in Brazil. I'd love to hear about that.
Yeah, happy to share a little bit more of what's going on here in Brazil. I think ultimately what we're talking about is policy certainty and ensuring that companies and investors receive the appropriate signals from policymakers as well, right? This year actually was the first year that CDP quantified and looked into transition dependencies, and we were really trying to see what were the keywords that companies were disclosing about dependencies when doing their transition plans. 94% of them disclosed dependencies to CDP this year, and 80% of them talked about policy being one of the key dependencies or one of the key barriers when it comes to transition plans and transition planning. And here in Brazil, what's happening actually is that the government is really willing to take this coordinated approach. The government is both under the umbrella of the Ministry of the Environment with Plano Clima, is working on the mitigation and the adaptation front to develop national level plans, but also sectoral level plans that will be working both with corporates and the subnational level to do some sort of a bottom-up approach to feed into the Brazilian NDC. And that will actually come with data, which is quite exciting because it will allow us to monitor the implementation of the NDC, but also on the subnational, on the corporate level, to see how a whole of economy approach is doing towards the transition. So CDP and MCTI partner up this year. We've been partners for about 4 years in sharing specific emissions data, but this year in particular, we've actually partnered with MCTI so that the MCTI is the Brazilian Ministry of Science, Technology and Innovation, so that the platform that they have launched, which is called Data Clima, can rely on real economy data to monitor NDC. And this will really fit this loop of national transition planning that we've been talking about, where S2 related data that is coming from CVM's resolution 193, which really requests companies from Brazil to disclose aligned with IFRS S2. That data will be feeding into Brazil's Data Clima to aggregated data, of course, to inform the evolution of the NDC, can also support with transition finance in informing credible flows of finance towards the NDC, but also towards corporates that are allowing and are moving towards the transition as well. And once this is informed by Data Clima, it will then go back to the information of the Ministry of the Environment with the sectoral plans so that they can update and publish those plans together in a collaboration with the industry as well. So it's quite exciting. This is a 3-year project that is coming up, and I would really recommend you to keep an eye on that. Brazil is really on the vanguard of implementing national transition planning here.
Here. I have one last question for Rahul, and if there's time, please do raise your hand if you have any questions. We might have time for a question or two from the audience, so please do raise your hand anytime you have a question. Keep it in mind and we'll come over to you. So the last question I have for Rahul is, we heard about the credit ratings. Now we have a general understanding what it is. I think it's a key ingredient in all these decision making on the financial side. How is climate change affecting that? Is there any way that credit ratings might, maybe you wouldn't say punishing, but we want to see if companies that are not transitioning, is that going to affect?
What a question to end with, Nina. So I have some numbers and I will share them, but before I do, what do we mean by climate-related credit risk, right? Let's take an example. European car makers, right? They're facing transition risk. What do we mean by that in practice? We mean they're facing the phase out of internal combustion engines. Is it 2035 or 2040? They're facing new entrants into the market that are producing incredible cars at low cost, electric vehicles with fantastic range, and they're coming quickly. And they're facing a changing consumer. The European consumer isn't necessarily excited by a multi-valve gas guzzling car anymore. So these are huge shifts that those companies are facing that's going to impact their decisions. It also means that they're going to have to finance R&D and investment in new types of products to adjust to this new norm, right? So that's one example, but that story is happening in many, many different sectors. And to put some numbers on it, so at Moody's we rate, give or take, around 12,500 governments, including Finland and Brazil, companies, banks, and utilities, 12,500. Of those, about 10% we assess transition risk as already influencing the way we think about credit. And about a quarter of those, so about 300 companies, where the rating has been downgraded because of how transition is impacting the business model and the balance sheet of those companies. So my message is, this is already having an impact on access and cost of capital, and it could increase. My second message is, just because you invest in green doesn't mean that you're a better credit story. You have to do your homework. We've seen Northvolt, the story of Northvolt that many will be familiar with. Europe's largest battery manufacturer went bankrupt last year. We've seen Ford Motor write down $2 billion in an electric SUV because no one wanted to buy it. So making smart decisions still matters as you transition. The good news here is there's a lot of tools now to help you. At the entity level, I've been part of the UK Transition Finance Council. There's good entity level guidelines around how you can set your strategy, make it business relevant, give investors the information they need. On disclosure, there's the fantastic work of CDP and the International Sustainability Standards Board. Everyone please rally around the ISSB. It's the best standard that we have. And then you have more and more guidance at the product level, things like the transition loan principles or new guidance as well. So there's a lot of information for companies, but my message, Nina, is this is starting to impact credit, and if it's not managed appropriately, those impacts will increase over time.
We are almost at time. I don't see any hands, so if there are any questions, please raise your hand. Otherwise, I have one final question for any and all of the panelists, so jump in as you wish. Is there a hand? No? No? Okay. The last question I have is just, we're here in Belém, we're fortunate to be here. What would be one thing, not the only thing, but one important thing that you would really love to see on the headlines at the end of next week? An outcome that would make you feel positive about this COP here in Brazil?
So since we are in the Finland Pavilion, I figured I would share a quote that I just heard from Johan Rockström, actually. We were in a meeting a couple of minutes ago, and he was saying that he fears that the Earth might be losing its resilience, and that 1.5 should no longer be the target, it should be the limit. So I think around this conversation that we're having around transition planning, transition finance, there is an important point on adaptation and in ensuring that adaptation is also embedded into transition planning. And with that, we have the negotiation going on around the final indicators on the global goal on adaptation. So the one thing that I would love to see is the final list in 2025, not in 2027.
Thank you for that, Flavia. Anything from either of you, Belém or Rahul? Yes.
I want to stay positive no matter what will be the outcome, and let me be incrementalist in this sense, so that the transition, that the direction keeps on the right, we're going to say right direction all the time, no matter the turbulence around here. I just wanted to share just one piece of lessons learned from the national target setting, because what I would not do if I would be planning again the national target is a very accurate, very strict, figure-based national targets, because what it can turn to is that if Rahul has a corporate wanting to make an investment on a greener basis, so at the moment, at least theoretically, we are in a situation where if there would be industry level investment coming outside the Finland, being top state of art in its green impact, but it still bringing some emissions with it. So basically in our model we need to say, sorry, but we don't have any quota for you left. You should be looking somewhere else, even than what we would offer the green grid, the green electricity, the green context for it. So
Thank you for that. And Rahul, do you have any closing wishes?
I'll be very brief, and it's probably a politician's answer, Nina, but I think we're past the sort of one headline to rule all headlines COPs, and what I've been really encouraged by is a few things. So water is definitely on the agenda, both here and increasingly with the private sector, and I think that's fantastic because water is not only the way that often climate change impacts credit, but is also a huge solution. So I've been impressed by that. And look, let's hopefully we learn from what Finland are doing, we learn from what others are doing, we share stories, we share examples of what work, and we scale. So I'm not looking for that single, sort of headline this year. I think it's going to be many, many little headlines that we can aggregate constructively. Yeah.
Thank you all for listening. Please join me in thanking the panelists and have a great day.